Well, it has rolled around once again. It is Friday Fun Day. I am Ken Rossix. I am the actual, I guess my true title is Chief Operating Officer of Sub2 Empire. We are here. Sub2 Empire is powering the Creative Real Estate Mastery podcast. As you are well aware, we appreciate your the diligence many of you have in watching us every Friday. I am going solo this Friday, as you can see. Mr. Kaufman, who is the founder of Sub2 Empire, is actually taking a very much needed vacation. So we hope he has started. He's actually traveling today. So hopefully he will get some rest and relaxation in. The guy probably needs it. We all need it. It's been a busy 2025. So anyway, you can see the smile on my face. I'm going to go solo. And as everyone knows with it, like I forgot to do the countdown. It's like I'm actually recording this and it's going to air at 11 on normal time. I'm actually recording it, but it should stream live. The recording should stream live at 11 if I'm able to figure all that out. So bear with me. Um, it's going to be because I'm very excited. Last week, if you were watching, we did, I guess I'll call it a soft announcement of our new real estate fund called the Creative RE Capital Fund. It's the Creative RE Capital Fund. And I am going to go ahead and do some pitching for that. Here, I'm going to actually put up the logo and everything for that. Right there, the investor information page. Our fund has been duly set up and registered with the SEC. It is actually a Delaware LLC company formed in Delaware, and we have been registered with the SEC as a 506C fund. What does that really mean? All that means is that we will allow accredited investors, and you must verify and be accredited investors fund. Okay, so let me take a step back just for a second. So about the Creative RE Capital Fund, why we established it, those sorts of things. So let's go. Mr. Kaufman and I have been talking about real estate fund, establishing a true real estate fund that this fund will be a debt fund. So that means we're going to originate loans backed by real estate assets. And then the return on those loans will then be provided. The targeted return for on those loans will then be provided as debt. Okay? That's the concept of the fund. Why did we want to do that? Well, you know, at Sub2 we're creative deal experts. We've been doing that for a long time. Between Jeff and I, we finally, as we were going through the establishment of the fund, we finally went back and started counting through all the deals and transactions and real estate deals we done. We have probably approaching well over 600 between the both of us deals. Jeff definitely has a lot more on the wholesale side, something I never really did too much in there, but we have a lot of real estate experience. So as real estate investors, we've done all different types of investing. As I mentioned, Jeff did a lot of wholesaling. We now took our model under Sub2 Empire, our seller finance model. We try to acquire property creatively, right? Subject to, right? Hence the name Sub2 Empire. Subject to, we then turn around and sell that property, right? We do an agreement for deed or wrap mortgage or whatever it is to an end buyer. And then we have three potential profit centers on that. The down payment, right? When we sell it to the buyer, we then have, which will reimburse us for our cost to acquire the property, hopefully, and a little extra. We then have monthly cash flow, right? Because we are wrapping a note over the subject to note or the original seller financing or however we acquired the property. And then at the end, at some point in time, that buyer is going to pay us off. Either it's going to be at the end of the 30-year term that we created with them, or 20 years, or whatever that the term is, or they're going to refinance us out and lump sum pay us off at some point in the future. So we're going to get paid on all those different aspects. That is our particular creative deal model that we teach our students inside Sub2 Empire that we focus on. We do a lot of other stuff too. We do a lot of flips. We actually got back into the flip game. We've got actually several flips going on now. And we acquire, buy, and hold property. All right. So why am I mentioning all this if I'm talking about the fund? So stay with me. I'm going to connect it all. Right. So we have a lot of experience on the real estate investment side. Right. So that's that side of things. So we've borrowed private money. We've used our own money. We've used traditional bank financing for all types of different deals and all types of different scenarios, depending on this over the years. We pretty much exclusively, I say exclusively, but we largely do creative things now. Like we just acquired a property that was strictly on seller financing, no bank qualifying. We have several subject to properties that are currently in place, and all of those things. So that is our focus lately. Even our flips, we like to focus on subject to flips. Interestingly enough, but again, we have used, right, from being a real estate investor, from being an experienced and veteran and successful real estate investor, we know what it's like to be a borrower, right? Whether that's with a traditional bank, whether it's with a private money lender, whatever that looks like we know what it is to be a borrower. Okay. We also lend it a lot of private money out. Like inside Sub2 Empire, we primarily to our students and even outside people or people connected with students. We've done 30 plus transactions in the last couple of years, just lending in private money, kind of focusing on that gap lending, the acquisition costs for subject to and second position, those things, kind of a niche real estate funding. And we've had so many requests, and we don't really advertise for that niche funding. We just word of mouth through our students and everything. And we have been pretty successful at lending out our money. But we have limits, right? We unfortunately have limits on what we've been able to lend, and we want it to scale up and level up. That is my 2025 thing. If you remember, like it's now almost the third week in July, but going back to January 1st, 2025 for us was going to be focused on level up. Our level up is a real estate investment fund. Okay. And it is now here. It is the Creative RE Capital Fund. Very excited about that. Very excited about that. So there are stages to how the fund operates. So it has taken us weeks. We actually decided to take a couple of steps back with the fund and redo some things. So it took a little longer than anticipated, but we wanted to make sure everything was done properly and right. And thanks very much to Verivest, who is our fund administrator, right? Investor relations and reporting and all that stuff. We've partnered with Verivest. They've been very helpful, particularly Matt Burke. So thanks, Matt. We appreciate that. And also the real estate attorney that we have, actually the fund attorney that we have that has been helping us, has been super great. So we appreciate all that and all the filings and all the patience and questions. Because if anybody knows me, shit, I have a lot of questions. Like I was, it was funny when we were going back and forth with the attorneys. There are different fund documents that need to be created, right? There's the fund operating agreement, and there's the PPM, which is the placement memorandum, which outlines how we're going to operate the fund and all that stuff for investors, which you can actually go to and see. If you click on the that I've left up there for the fund, it takes you to our website, and you can take a look at that. The subscription. So there's a subscription agreement in there. These three different major documents that underlie the fund. I think I might if you read every word of every single page in all three of those documents. That's just me, because I'm super serious about I'm obsessive compulsive, as you might say, but I'm super serious about being successful in this. I don't do anything that I don't think I can be successful at. And I smile a lot because I think this real estate fund is right in my wheelhouse. I am officially the chief operating officer of the Creative RE Capital Fund. Jeff is the chief executive officer. So my main goal is going to focus on the day-to-day operations, the assets, and the borrowers, right? Because we're going to have a real estate investor that wants to borrow funds from us, right? That's the whole goal in there. And then there has to be this whole vetting process, the underwriting, so to speak. So that's going to be kind of in my wheelhouse, the documents, the loan documents, and all of that. Okay. So, all right, all of that, what we're trying to do is open to accredited investors. Okay. So the minimum fund, right? The minimum, if you want to invest in our fund, it's $50,000 as the minimum. Now, we can, depending on some circumstances, and can, maybe go a little lower than that 50,000. Talk about the particular situations, but pretty much we've targeted 50,000 as the minimum investment. So what happens? You are the investor. You say, okay, Ken, like, I trust you. I know you. I know, like, you're great with money. You assisted with multi-million-dollar budgets when you were with human resources. Like, you retired at age 45. Seems like you're pretty good with money. Like, how do I invest? Okay. And so what happens is you take that $50,000, you wire it into our fund, right? You go through the process, you go through the subscription agreement, we talk, whatever that is, right? Too. And so ultimately the money transfers, you send money to the fund. Okay. Once the fund has to meet a minimum, we just opened this up, by the way. So today is like opening day. It's launch day. It's opening day, right? So our goal very shortly is to get $500,000 in, right? So if it's 50,000 as a minimum, that's 10 investors. We get $50,000 in. Of course, they can invest more, but let's say everyone does a minimum. We get 10 investors in. We're $500,000. We need to reach that $500,000 threshold before we deploy any funds. So in other words, the borrower, right, the real estate investor that wants to flip the house, right, because we're going to loan money for house flips. Okay, so that investor, right, who's going to be vetted and underwritten by yours truly, like we'll oversee that process, is going to be wanting to borrow money from us. We have to have $500,000 in before we loan $1 out. Okay, so now is the time to get into the fund. Now is the time. We definitely have interested borrowers out there who came. So if you go to our website, you'll see that the borrower side. So if you want to get a loan from the fund, you'll see that that is coming soon, because right now it's the focus on the investor side. So I'm talking to you, right? You, particular person, if you want to get into real estate investing, all right, but don't want the tenants trash and toilets, don't want to be a landlord, you don't have the time, you're still working in your W-2 job, but you want to, you're tired of seeing the stock market go up and down, whatever it is, right? You just like Ken and Jeff, and you're just like, shit, looks like those guys know what they're doing. Let's jump in. Like we appreciate you. So, like, that's it. That's what we're seeking right now. That's the solicit that. So there are levers of the fund. There's the investor side of the fund, which we're seeking and opening now. And then there's the borrower side of the fund, which we will deploy when we reach a particular level, which happens to be $500,000 in. We will start deploying the funds to those borrowers on the side. Okay, so those are kind of the mechanics of how that fund's going to work in there too. And we're going to we're also, as we mentioned, real estate investors too. So we know both sides of it, right? We know the borrower side over here, but as I said, we're also private money lenders. I've been doing that for 15, 20 years now. Private money lenders lend from our self-directed IRAs, lend from just savings we have, lend from other lines of credit. There's all types of of ways that we have lended in the past too. And so we are just now leveling up. That's the motto, leveling up. So I just want to talk a little bit more about the details. I know you can go to the website and see all this too, but I just want to talk a little bit more details about the fund. Again, our focus right now is on the investor wanting to put money into the fund and seek a return, right? So obviously we have a target goal. We have particular underwriting criteria for the individuals that want to get money from the fund. And then we also have asset. We have the actual piece of real estate. We have criteria for that as well, right? So all those criteria, both for the asset, the piece of real estate, and for the borrower, has to be met before we will loan money out. Okay. Now, our goal is to make that process more streamlined because we know how it is to be sitting here and they ask for the hair sample, the DNA profile, the urine sample, the fecal sample, all that nonsense, right? Just to get a private money loan. That seems ridiculous. Remember, this is asset-based lending. We still do have individual and LLC guidelines, obviously, but we know what that's going to look like. Okay. So sorry, I digressed a little bit. Let me bring it back to kind of the fund. Let me just talk about the fund, the Creative RE Capital Fund. You can see right there on the page. And I am actually going to change that view because I just like to mess with things. So I'm going to put this one down here. There it is. You can go to our website right there. This one is the about. So it just gives the overview. It's the creativerecapitalfund.com about. And it gives an overview. It gives some information about Jeff and I and our experience on both sides of the process and why we're leveling it up. Okay. So very excited, by the way. Very excited. A little nervous, I'm being honest with you. Apprehensive, nervous too. But we've been going through this process, as I mentioned, for several months too. So I feel like we're ready. I feel like, well, Jeff's probably been ready. So I feel like I'm ready to take the next step and get this thing launched for the benefit of both, real estate investors that want to borrow and also for those that want to invest directly into the fund and see a targeted return. Okay. Okay. So the fund. So I mentioned our particular fund is a Delaware, is registered in Delaware. Okay. And our target raise in the short term, like as we have to get to 500,000 before we deploy any funds, and then we want to quickly get to $1 million and $2 million in the short term. So what do I mean by short term? 6 to 12 months to get that, and then ultimately keep scaling that up to upwards of 25 million, which is kind of where our target is. We can go above that too if we have a lot of success, a lot of interested parties in there, but we want to be able to scale things as we grow. And so that's what our target is. That's why we have that $500,000 minimum before we deploy any funds to anybody. All right. I mentioned kind of the investment strategy. We are focused on making loans. So we're going to create notes and liens. We are going to do first and second lien positions on real estate. Okay. The first positions, we are going to look at funding kind of your typical fix and flip. So I buy a property for $100,000. I put $50,000 into it. I sell it for $225,000. Okay. So we're gonna lend on that acquisition and that rehab potentially, depending on the terms and conditions or what specifics of each deal. And then when that property is sold, right, that loan will then be returned. The principal amount of that loan will be returned, plus all the interest and loan fees, document fees, all that stuff too, which is what then translates into a return for the investor. Okay, you. Is that right? So that is one thing. We also, I mentioned, we are, we have this whole other piece out here, Sub 2 Empire, which is powering this podcast, by the way. It's Creative Real Estate Mastery Podcast. And so the other goal is to also focus on that gap lending that we've been doing, and again, to scale that up a notch. So we also want to focus on those creative deals, those acquisition costs for the subject to deals. So just as an example, a person comes across a great subject to deal. they need $32,000 because the loan is behind. They need to make the loan current. They need to give some money to the seller to walk away to take the deal, closing costs, all that. So it's $32,000 that they need. Well, we will gap fund that $32,000 in second position, just so long as the combined loan to values. Remember, because it's a subject to deal, so there's already a first lien in place. So we're then going to look at that combined loan to value on that particular loan and just make sure it meets our guidelines. It's like not more than 85%, so that when that gets paid off, right, or there's an end buyer that comes in, we then can get paid back, right? So we're looking at short-term loans, primarily in first position, but we will lend in second position. Okay, just depends on the circumstances, right, and our underwriting process, so long as it meets our guidelines. And that we are also going to look at experience, right? We want to experience new people, especially if they come in and are our students. In other words, they come in as part of the Sub 2 Empire, and they're a creative deal partner, so that we are going to walk hand in hand with them through the deal process. Well, if we need capital in order to fund their deals, this fund will be able to do that for them as well. Okay, so that is a goal that we have, is to seek experienced people that know what they're doing. We're going to stay in Midwest markets. Obviously, we're based here in the St. Louis metro area. We're gonna focus, although we will hope to expand this too. But our focus right now is kind of in the Midwest areas, on markets that are appreciating markets and have strong, uh, but strong key indicators, like there's stable job growth, the unemployment rate's low, all those sorts of things. And so we know those markets. We've already been lending in different markets around there, especially in Texas. We have several deals out there in Texas. So we understand the markets and all of that too, again, because we're actual real estate investors. So what we try to do is we try to create a fund that is built for real estate investors, by real estate investors, to benefit all of our fund investors. A lot of investors there to keep straight, but hopefully we did that. Okay. So again, how to invest? Just like go to our website. Actually, I'm going to stop the scroll, I think, and I'm going to toss back up the QR code there. So you can go to our website, right? That will take you to the website, and you can go see our private placement memorandum. It's a very long document. It has all the details in there about what the focus of our fund is, right? I talked about kind of the assets that we're looking for to do that, the operators, the borrower profiles, the underwriting criteria, all that is in the private placement memo, right? So if you go to the website, um, you'll be able to see all of that, right? And of course, right, when you come into the fund, we have to establish units. So right now, one unit is $1,000. So if you come in at $50,000 minimum, you're going to come in at 50 units. As we have assets and as we deploy money into the funds, the amount per unit will change, right? So as we have some in there too, it may be $1,250 for a unit instead of the 1,000 that is starting at new. But right now it's $1,000 per unit to come in. So that's how your money's going to be allocated, and you'll see those terms in the documents. Yeah. Um, so the fee structure. So now you're thinking to yourself, okay, well, you know, why are Ken and Jeff doing this? Why do this? Well, we really wanted to create a fund, create it again by real estate investors for real estate investors. So we've established that there's a need out there, and we want to put that gap in, especially on the creative side, right? That gap niche funding. So we want to plug into that. We want to make the process streamlined and easy, whether you're a borrower on this side or whether you're an investor on this side, right? So that is our hope. And from all we're trying to put all our real estate experience and knowledge into this, so that we can have both sides of how the fund is going to operate be smooth and profitable for everybody, right? Obviously, we're going to target returns. That's the goal. If you want to invest in the fund, you want a return. So that's what we're going to try to accomplish to the best of our ability. I've been pretty successful at it in the past. So just saying I, there's a reason why I can retire at age 45. All right, there's a reason I can do that. I always say that if you see some of our other stuff, I always say, well, it's because of real estate. Real estate allowed me to do that. That's true, right? That's true. But there's all kinds of different pieces of real estate, and one of the pieces that I'm really interested in and has been very profitable for us is that private lending piece of the real estate. Right? Not just the coaching programs and not just the flips and all of that stuff too, although I've done all of that, right? So it's that piece. So again, it's just about taking that piece that we're really good at and knowledgeable in and leveling it up. That's what we're trying to do here. Again, you see the smile on my face, right? Yes, I'm pretty